Hi, and welcome to the Stock Scores Market Minutes for February 8th, 2016. This week's topic, trading success requires process. Let's get right into that. There's a tendency for traders to focus on the rules for entry and exit, and they think that that is the most important part of trading, and it is certainly important. But the problem is in real market conditions, when things are moving quickly, particularly if you're a short-term active trader, making quick decisions with a lot of pressure, it's very easy to see what you want to see. In order to stick to your rules, to avoid falling into that trap of seeing what you want to see, you need a repeatable process that keeps you focused, a step-by-step way to evaluate trades that will help you adhere to your trading plan. And so it's important as traders to come up with this process, this methodical process to keep you on course so that you can stick to your rules and do the things that the rules tell you to do, not what you might do because you're caught up in the emotion of the moment. So not only do you want to define the strategy rules for when to buy and sell, but also a process as mechanical as possible to help you stick to those rules. All right, let's get into this week's analysis. So a little bit of a crazy week. We had lots of volatility up and down without really going anywhere. You can see here we have the 30-day chart, 30-minute chart. But for the week, we ended down slightly, but for the most part, we've been stuck in this trading range for some time. What's important is to notice that the volatility up and down is really quite strong this week. And that tells us that investors are uncertain about where this market is going. People don't know whether they're coming or going. And you can see early we had a run up, then we had a run down, and then a run up and a run down. We're all over the place, and that tells us that investors aren't confident. However, pessimism is growing. You can see on Friday we had a pretty strong down day, and that implies that we could see more weakness. I'll show you why in just a moment. Here is the weekly chart, and we are now testing this low that we've hit a number of times going all the way back to October, and then of course this past summer we bounced off of that level as well, and this week we are testing that pressure point, that low line of support again. And as I've said a number of times in recent weeks, we're doing so from a falling top, and that's real critical. So yes, we could bounce off of this, but it looks to me like this market ultimately wants to go lower. It's just a question of when. Now, when we go to a daily chart, and for the daily I've put in the Russell 2000 index chart. This is what's called a bear flag. All right, so this is a little flag pattern right here. The trend into the flag is down. That's why we call it a bear flag. It looks like a little hockey stick. And notice that on Friday we broke down through the bottom of that flag. That is a strong signal that the market is likely going to continue lower. Look what happened to the stock scores indicators. They're designed to pick up on things like that, and you can see that they really dropped on the end of the week here. So this chart is the daily of the Russell, but we have a similar picture in the NASDAQ, in the S&P 500. The U.S. markets look like they want to go lower in the near term. Now we contrast that with the Canadian market. Notice that the Canadian market is actually, again, this is a short-term chart, building rising bottoms over the last little while, and that is because oil is stabilizing. Now, the Canadian market got a real helping hand this last week because the US dollar dropped so much, and we'll see that in just a moment when I show you the chart of the US dollar. Well, a dropping US dollar helps gold, helps oil. Those, of course, are heavily concentrated in the Canadian market, and so that's why the Canadian market was actually able to outperform the US market. First time in a long time I can say that, but it does look like some stability may be coming out. So although I don't really love the Canadian market, and you'll see why in a moment, it does look like it wants to outperform the US market in the near term. Now, here's why I don't love the Canadian market just yet. Really what it's doing right now is making a comeback from oversold conditions. Heavily oversold here. That was on the weakness of oil. Now we're rallying back, but we're not through the downward trend line yet. What this market needs to do is build a rising bottom and then break this downward trend line. It's got a lot of work to do to get to that point, but at least we're making a step in the right direction in that it was able to rally back to the downward trend line. Here's the TSX Venture. Shoot, sorry, I've got the wrong chart in here. I did this last week as well. This is not the TSX Venture chart, but the TSX Venture chart essentially looks like this, and it made a pretty good comeback in the last week because of the strength in gold, and I shouldn't say strength in oil, but at least stability in oil, and of course heavily concentration of those stocks on the TSX Venture. But the TSX Venture has not broken its downward trend line yet, so therefore we can't get too optimistic just yet. All right, here's Treasuries. Back here, I said that it looked like Treasuries wanted to rally higher. The reason? The market was breaking from a pennant pattern. Well, as the market, the stock market that is, continues to show more and more fear and uncertainty, money is flowing into the Treasury bond market, and that is why we're getting this little rally here. Rising Treasuries mean lower interest rates, and that, of course, is getting some support from the U.S. Fed, who, while they were expected to raise rates 4 times in 2016, now the commentary coming from members of the Fed is like, well, maybe we shouldn't do that. Maybe it's not the right time for that. So that's helping the Treasury bond market move up. That's also helping the U.S. dollar move down. This is a weekly chart of the U.S. dollar, and you can see that the U.S. dollar had a pretty big down week, breaking an upward trend line from falling tops. So it looks to me like the U.S. dollar wants to go lower. I don't know that it goes a whole lot lower. It's got pretty strong support right in here, and so I think it could have another couple bad weeks. But at the end of the day, if the world is falling apart, money still looks for the safety and sanctity of the U.S. dollar. So although it's expected maybe the Fed won't raise rates as many times this year, which is what caused this drop in the U.S. dollar this week, I don't know that we're going to see a much bigger drop. I think we're going to be range bound in the U.S. dollar for a little while. All right, here is the chart of gold. Interesting chart because it managed to break the downward trend line this time. And we have seen many, many times how it has bounced off of that downward trend line. Well, this time it's actually broken through that. Again, the reason is 2 things really. The weakness in the U.S. dollar, which I think is the most important thing, but also the growing uncertainty about the global economy and how that's going to affect markets. The problem with this break of the downward trend line for gold is that it is not doing it from a rising bottom. If we think about the lows made in gold on these downward swings, this is from a new low, and it's basically rallied from that. So my thought is short term, maybe rolls over, tries to then build a rising bottom, and maybe we make a second stab at breaking that downward trend line. Gold making a step in the right direction. I've been a bear on gold for years, and this week I'm starting to say, well, maybe it finally will make a bottom. I think it's got a lot of work to do still, but certainly something to watch for. Oil is stabilizing a little bit in here. You can see that we're getting a little pennant pattern forming there. However, it has not really made a definitive break of the downward trend line yet. Could do that, but until it does, I wouldn't get too optimistic. I do like that it's building a little rising bottom, but think about it this way. It was doing that back here, tried to stabilize in here. It even was doing it back here, but oil still has not made that definitive break of a downward trend from a rising bottom. That could happen Monday. We're right at the tip of this pennant pattern, so watch it closely, but also it could break down and continue lower. So what you want to watch for next week is, does oil break up from this pennant or down? Whatever direction it goes is a telegraph of where it's going in the near term. Keep an eye out for that. Finally, the fear chart. Here I go again. I've got the wrong chart. I'm having a little problem with loading the right charts in here. But anyway, the fear chart is basically making a rise from a rising bottom. That tells us that fear is increasing, volatility is increasing because the market is expecting negative things to come, and that is a concern for the stock market. So my outlook then, I am lowering my rating on U.S. stocks to bearish on both time frames, but I'm raising my outlook on Canadian stocks to at least a neutral in the short term. I do like how the Canadian market held up better than the U.S. market this week. Still long-term bearish because it is below the downward trend line. Gold, raising it to neutral. It is trying to stabilize. Wouldn't get too bullish yet, but certainly if you're a trader, this past week was a good week for you because there was some good action in the gold stocks and gold itself, and I think that might continue in the near term. Oil, bearish long term, is trying to stabilize short term. Again, I wouldn't get too excited yet, but step in the right direction. The U.S. markets appear ready to take the lead to the downside, but because commodities are getting support from a weaker U.S. dollar, Canadian market actually looking a little better than the U.S. market. It's kind of a situation where it's a cleaner shirt in the dirty laundry pile. Don't get too excited about the Canadian market. It's got lots of work to do, but it does look a little bit better than the U.S. market this week. Traders can play that Canadian bounce, but don't believe in a trend reversal yet. As I said, Canadian market's better than the U.S. for the first time in a long time, but we have to remember fear is increasing, and if fear causes the market to move sharply lower in the U.S., probably going to drag the Canadian market down as well. So be cautious out there. Take a very short-term outlook toward the market right now. Trade the fear, trade the VIX, trade the intraday volatility, but be very careful holding positions for a longer-term hold because it is a negative pessimistic market. That has been the Stock Scores Market Minutes for February 8th, 2016. Have a great week in the market and trade well.